Alright, hello everyone, and welcome back to Daily Update, my 1000 days challenge. These days are around 39, so let's get things started. Alright, so first and foremost, there's no change in terms of equity balance wise over here. What I mentioned, I'm seeing in terms of a long setup over here. So over in terms of daily chart itself, we do see in terms of S&P 500 and Nasdaq or the US market in general, there's very clear sign of rejection wise on 200 exponential moving average on the daily chart. So that's definitely not something we want to see, especially when it coincides with this horizontal resistance level itself. We're still maintaining within this range. So the key thing is that we do not want to break out of this range. We want to consolidate over here and giving time for this 20 exponential moving average to catch up. Of course, we could also pierce right through it and then retest it immediately. But my personal preference would be that we consolidate near this range first prior to a strong breakup. That will make it very much more likelihood that we could break for this 4.1K region itself all the way over to this 44.3K region itself. So there will be a good range that we could go for. And if you look into on Nasdaq, why similarly, same thing, we have clearly rejected off the 200 exponential moving average on the daily chart itself. So similarly over here, I think some sort of okay. So alternatively over here, I do think that potential retracement and pullback will be more likely, similar to what we experienced over here, and then we could have a retest over here. But of course, ideally, I do want it to consolidate over here on the highs itself, while giving time for this 20 exponential moving average to catch up, giving rise that the average price for the last 20 days itself is catching up in that sense, and that will form a much stronger base if we were to break towards the upside to retest, in which case the 14K region itself. And over in terms of ASHR and KWAP, I do lean towards a bit more bearish momentum simply because even though we did bounce, you can see the volume is decreasing itself. So there's a little bit more cautious, and price still remains below 20 exponential moving average, which is definitely bearish in nature itself. So similarly, we're seeing over here rejection of 20 exponential moving average, we're dropping below that. If we do drop any lower below this $27 mark itself, I do think that a very likelihood retest of this $24 range is very much likely in play. And that's not something we want to see because we already retested 3 times. If we do retest this on the 4th time itself, there is also a strong potential likelihood that we could break below that. Alright, but if we look in terms of a Bitcoin or crypto market in general itself, we do see nice support over here. We form a pretty bullish candlestick. Volume is relatively decent, not strong, but not weak either. So a very good push, in my opinion, would be to break past this 24.5K region itself, along with strong volume pickup. There will be a clear confirmation sign that we are very likely to reach the 28.3K region itself. But of course, consolidation here is not necessarily a bad thing. Maybe we could have a strong breach to that. But on the flip side, we could also have a very strong break towards the downside as well. So be cautious over that when it comes to consolidation side itself. But for me, on the 4-hour chart, like I mentioned, I've entered a long setup over here itself. So as long as price does not close below the 20 exponential moving average on the 4-hourly chart itself, then I will still stick to my long setup and I'll wait for at least the very first target to hit. But if prices just close below that, then I'll either take a break even or a small little bit of loss itself. Otherwise, that's more or less about it. If you guys have any questions, feel free to drop by your comments below, and I'll see you guys tomorrow. Take care. Bye bye.